Hi, everyone. Hope you had a nice weekend recharged. Since Russia's on the front page of Geo Risk, I thought I'd cover a couple of things here in the ruble. This is what the ruble did on Friday into the news that it was imminent and the evacuation orders by President Biden. And as you can see, it is a lower high. And I do a lot of intelligence gathering with people that I interview, and um, one of the better wave guys I know is looking for the ruble to advance, which means US dollar ruble will start heading down. This looks like it could be a failing rally. And it's because of this, he didn't think there would be an invasion. I know some pretty smart guys that didn't think there would be an invasion. We'll see. But if there is, even if there is, and we had one more push up in the ruble, you take a monthly view on it, and this could be a pretty big distribution top. I don't think it's going to turn into the Turkish lira because Russia has mucho natural resources compared to Turkey. Okay, it's not the same situation. So this could end up being a nice shorting situation. And if you're a contrarian, and you want to buy stocks, but you're worried about the overvaluation of US equities, there are some ETFs that you can take a look at. Here we go. So we're opening up a little bit higher here. This is not it. This is okay. So we're opening higher here. So this is the Russian Van Eck uh, RSX. And here's the other one that Peter Goodburn talked about on his interview a few weeks ago, putting in higher lows, constructive action. So, what the markets are saying and what we're hearing on the news might be two different things. Anyway, if there is an invasion, perhaps we get one more low in Russia. Right now, I don't think so, and one more high in the US dollar ruble. I'd pay attention to that. Okay, so let's get back to today's action and review what I talked about last Wednesday. So, euro, I talked about buying the dollar on dollar weakness into the inflation print that we had on Thursday. And that worked. You had a false breakout, a stop hunt in euro. There is some support here at 1280, but I'm starting to think that still thinking, not starting. I've been thinking about euro trading under 111 for a while. Maybe this is a trip. You could say it was safe haven buying. Uh, you'd rather be in the dollar. You have an ocean separating you from Europe compared to, Germany, just being behind some of the Baltic states, as being close to Russia, as well as Europe having energy problems if Putin does invade and weaponize the energy sector. Um, I think it's possible that oil even peaked out on this if there's not going to be an invasion. We've had some uh, not quite great divergence, but take some of the war premium out, and 84 looks viable to me. So the metals have been on fire. If you listen to me Wednesday, and this was before the CPI, I was looking to sell gold between 35 and 40, and that was a high, and it worked for a day trade. So even if you sold it at 35 with stops over the high, at one point you still had $15 made. If you can't make any money when the market goes your way in gold for $15 and you didn't book anything, you really have to learn about booking partial profits. I did not reverse. The silver was the better short. It went right to 61.8 here at 23.70, and this one went to 22.80. So it was 90 cents from the idea presented a day before the CPI. Said look for shorts between 23 and a half and 23.60, and that definitely was the right thing to do for a day. Okay, so every trade starts off to be a day trade. And that's why when you have markets moving your way, you take profits. If I had not booked something on silver or gold on Wednesday, it would have been for naught. But you take your partial profits and you trail your stop to BE, and on half your position, you made money. On the other half, your BE. It's called money management. And that's something I think a lot of people lack skills in. One of the best ways to overcome that is to learn to want to get paid when you have something working for you, and not be greedy and take something off the table. It's not a profit till you take it. So I'm still constructive the dollar. I talked about that last week, and dollar's having a decent day again. You know, it's still my contention that we're going to have another new high in the dollar. And last week when I was buying it down here, I said we would at least have a rally back to 96.20 if you want to be short the dollar. So here we are at 40. If you think this is a retracement, you could try it here, maybe for turnaround Tuesday. To me, it looks like an incomplete pattern here. And to me, that means one more high coming there. Even though the yen got slaughtered on Friday on risk off, it held where it had to, and hasn't taken out the 14.5 level, which makes a move back to this wedge line still viable. Okay, so see where it's coming in this week. Looks like about 1736 or so sometime this week. We'll see what happens. And the same story with yields. If you go back on my videos, I was looking for 2% by year end. It took an extra 6 weeks, and yields came off pretty good from targets at 2%. But today it's looking like we're going to, there's maybe 210 to 220 in it coming. So still looks, I think both this and the end could make new highs. Let me just get back to the metals now. I'm not doing anything here. I'm not short. I'm not long. I would say if someone put a gun to my head, I would still say, well, I don't want to do the trade. So it's possible we have a breakout. A lot of people were looking at this as a potential breakout in the gold, and definitely up until today, gold was outperforming for a while. So just move me over here. So just get a little trend line. So a lot of people, it goes further back, but this is pretty much the look that people are talking about for a breakout. So it would have to get back under 1845 to negate it. It's $15 from here. And then, you look at silver, and even though it's outperforming today, with silver up 23 cents, look at this rally where we've almost taken out the November high in gold. And look at this bounce, and we already have one lower high. So we haven't even achieved taking out this high. So I'm just going to be patient. I haven't shorted silver either. We'll see what happens tomorrow. Maybe we try 78.6. Right now, it's an I don't know, and I'm okay with that. Last week in the S&Ps, I said you could fade strength in the S&Ps into that number, and it was another, another call that worked out. Now here we are trying to put in a low for perhaps a C wave, and look how close NASDAQ got to the prior low. So in NASDAQ, we've almost accomplished it. So the only constructive scenario I could see from here would be some type of ABC that could take us back up here. I don't think this is an ideal time to short it, but if you listened to me Wednesday and you saw the rally, that was it. So it's kind of like two major news events in a row that the preparation for how to react to it, not predict it, because I didn't know what the number was going to be. I was just prepping everyone that listened to me on how to react to the number, not predict the number. That's something for Nostradamus. This trade worked too. So I really don't know what to do here either. I think there is a possibility that this holds, especially if Putin backs down. You know, I'm not sure. I'm trying to figure out what's the end game for spending all that capital to mass on the border. One of the things that he accomplished, though, was, you know, they're a big oil producer. So it hasn't hurt them at all in oil because they're getting more for their oil on this. So maybe that was one of the reasons, economic reasons. But I certainly cannot be long oil up here. Okay, so the people that are long oil and you're hearing 120 now. Well, I don't know, where were the 120 bulls here? Or let me get the weekly up here. So you start getting the most extreme calls after a major move, right? So, you know, the calls for $100 oil, you know, certainly you weren't getting it here. All right. And you weren't getting it here. And you weren't getting it here. It's really been in the last couple of weeks, people are talking about 100, 120 oil. As you can see, there still is some non-confirmations, especially if we get a down week. 2-week reversal, write this down. If by Friday we close under 91.95, which is very achievable, could happen in a blink of an eye, and we close under that, by Friday you'll have a 2-week reversal. So this is a pretty important week in crude. I would say who's short. I mean, they've just, and I know because caught some of this, and then I was selling fib retracements here, and I just kept getting taken out. One way to participate without the crude excessive leverage and overnight risk. Here's an ETF that I think is twice the amount of crude. Like if crude's down 2%, this will rise 4%. This was the last time I tried it down here, although I missed a nice piece of it. We could be setting up for something like this here, especially if Russia pulls back their troops. All right, so I'd say that the calls from last week are, you know, in the books. I'm still bearish Aussie. I think you could still sell strength up here. To me, it looks like there's still going to be one more low in Aussie. Here's your daily. We tagged 72.50. This too happened on the CPI, so Aussie was another good fade. It's trying to recover a little bit with risk as NASDAQ's higher, S&Ps were down 30, 40. Now they're down 5. But to me, I think that there's some stops under here that are going to get taken out, and perhaps we have a third drive setting up here in the Aussie. Here's your weekly, and this channel line in the next couple of weeks is coming in a shade under 68. I'm a big buyer of Aussie between 68 and 66 for what could be a major wave to the upside. And looking at Canada, if crude does pull back, it might give it a lift. You could see it a little better here. We held the break last week, this too on the CPI, and we're threatening a breakout over this triple top that targets 131 to 133. So I like Canada on the long side on buy dips. Maybe you'll get a shot to buy it here, 27 with stops under last week's lows. And the same with Aussie. Maybe you have a decent rally to sell, maybe back towards 71.70, and you risk last week's highs there. And we'll see what happens in the gold and silver. I might be about to miss a huge move. A lot of people were looking for big moves into March, and perhaps they're going to get them. But I would still look to sell rallies in cable. That was something else I talked about last week, and you know, cable held up much better than euro as expressed by the correction in euro pound. So I thought this was an important move in euro pound, and we've retraced, I believe, close to 78.6 of it. So I think it's worth a shot risking the lows. It's about 100 pips. Maybe I'll try it tomorrow. And let's see what the 2-week off number will be here. I think it has to prove itself to the upside, which is correct. So Euro's going to have to do something special because the close was 84.63, so it's 100 pips above where we are now. So I'm thinking the low's in, and this is a pullback, and then we get wave 3 or C coming up here in euro pound, which is going to make cable the preferred short over euro, which it wasn't last week, but could become this week. And I still think that we're going to see this 110.30 level in euro, and just like Aussie at 68 to 66, I'll be looking to start accumulating down here as well in the euro market. So I think there's a big turn coming in the dollar, but I think you have to be patient for one more high in the dollar, one more low in the euro, one more low in Aussie. Look for some type of break in the crude oil market. And now maybe we're getting some negative news. You really are going to have to be nimble. I really do suggest trading smaller in this environment. I've traded through war scenarios before. Normally what happens is things like oil will continue to climb into the beginning of the battle. I saw it in the Gulf War, saw it in Iraq after 9/11, where the buildup while we were building up troops or Desert Storm, oil kept going up, right? Middle East, they had taken Kuwait oil fields there. And then once the invasion began, Desert Storm, I remember I was on a golf course, and back then, we didn't have iPhones. So I had to rush back to the office because one of my customers called me and wanted to buy bonds. And that's what happened. Gold peaked, oil peaked, and the bond and stock market put in a low on the initiation of the conflict. So just a little history there. There's other histories. Gold peaked when Russia went into Afghanistan, and maybe it bottomed this year when we pulled out. So there's a lot of historical analogs, and they give conflicting views. But something that I don't have a conflicting view on right here is definitely this big break we had in euro from here last week when they clean out all the stops. People had their stops here. Don't do that. How many times in videos have I stressed about having your stops have breathing room? So I mean, if you were short, maybe you were selling this rally and it was down here, and you go, well, I'll just protect myself with stops over this high at 1482.70. Yeah, 1482. And I'll just put in a 1483 stop, because if it takes out that high, it's going to go. No, because the high was 1495. It took out the stops by 13 pips. And then by the end of the day, it was unchanged. So let your stops breathe. There may be some support here at this 1280 level, but I'd be a seller if I had an opportunity right back at about 114. That's the way it looks to me if we get some type of rally here. Yeah, there, 114. And I think that's a wrap. I have a great guest this week. Helene Meisner is going to be with us. So she's very followed. Mike's a big fan of Helene's, and she'll be with us on Thursday. I'm going to be back for an update tomorrow. So while Mike's enjoying, the warm sea breeze of the Atlantic Ocean in Florida, I'll be doing my own spot tomorrow, and we'll see how things follow through. There could be some turnaround Tuesday setups, And anyway, I think I've given you a lot of things to chew on here. So we'll see. Tomorrow can be a day to take action on a lot of things that I talked about today. Buy a break in Canada, sell a rally in Aussie, sell a rally in Euro. Just watch the gold for now and keep an eye on the oil for some topping action as well. The high so far has been 95. And it's a pretty good reading. It could challenge it again, but hard for me to want to be long oil at 93. And that's going to be a wrap for me. I invite everyone to come to tradegatehub.com and share your ideas. Any questions you guys have for me before I sign off? Molwyn, Lewis, Jason, Brooke. Okay. All right. So we'll see what happens tomorrow. I'll be back in touch with you again. A lot of the signs, including the ruble, are saying that there's no invasion coming. And this looked like a nice failing rally. So sell strength. Sell strength here. This is a spec play, the ruble, and you have to check out your individual broker's spreads. Anyone know what the spread is for us here on US dollar ruble? All right, well, I'll check it out for you guys and let you know tomorrow. So that's a wrap. Good hunting the rest of the day. And be nimble and don't be stubborn. I still think the dollar has one more hurrah left in it. And then I think we're going to have a major campaign trade of being dollar bears for at least the next 6 months. Maybe we should start a dollar bear fund. Talk to you later, everyone. Remember, don't just count your pips, count your blessings. See you tomorrow, same time, same station. Hope we're adding value to what you're trying to accomplish as a trader. Adios.